and welcome to the special broadcast, viewers. We've been bringing you the biggest of the voices to talk about India revival mission. What should we do post May 3rd as a little bit of relaxation begins to come into place? Now we are waiting for the final announcement from the government, but suffice to say there are enough indications that there will be a graded relaxation plan of some kind to restart economic activity. Joining me right now for a conversation on this is Mr. Keki Mistry. He's the CEO and Vice Chairman of HDFC, one of the biggest voices in corporate India, especially from the banking and financial inclusion sector. Mr. Mistry, let's begin with what one should do post May 3rd. How do we go about reviving the economy?
I guess the government is the best in position to understand what needs to be done and which districts to open and which districts not to open. My sense is one should see a calibrated opening of the economy from the 3rd itself, and areas which are in the red zone must clearly be kept in the red zone and must clearly be kept isolated. But the rest of the economy can start working in a gradual sort of fashion. We might have to look at certain areas like Mumbai, where the number of cases is very large, and maybe Delhi and a couple of other places. But by and large, my sense is that there should be a calibrated opening of the economy with sectors with areas where there is relatively no problem. Those areas should be opened up first, and then gradually over the next 7 to 10 days, the remaining areas should be opened up. But the red zone should clearly be kept under isolation for a longer period of time, because we do not want this to spread any further.
Right. Mr. Mistry, of course, one of the big problems that we've seen is that even though the Reserve Bank of India has taken a set of steps to bring in some working capital, some liquidity, some cash in the hands of businesses to continue working, continue paying their own staff, but this is not translating on ground, and there is largely an agreement between everybody, including the RBI and the government, that the banks are still hesitant to lend money, to give money, and for justifiable reasons as well. But how do we fix this problem?
See, first of all, I would like to thank RBI. RBI has ensured that there is enough liquidity which is being provided in the system. So good for that. The problem today is that there is a huge amount of risk averseness that is set in amongst the banking system. So in the last 2.5 to 3 years, we have moved to an extremely tight regulatory environment in terms of disclosure of non-performing loans and stuff like that. So if you compare the write-offs that banks have taken, if you compare the non-performing loans that banks are showing today with what they used to show, say, 3 or 4 years ago, you will see that there is a marked difference. So these disclosures and the fear of more NPLs is what is causing the reluctance in the banking system. So my sense is 2 things need to be done. One is that there are certain sectors in the economy which have been very badly impacted because of COVID-19. Like, for example, the aviation industry, real estate, hotels, hospitality, retail, and a few others. So to my mind, RBI should permit a one-time restructuring of loans given by the banking sector and by non-banking finance companies to these sectors, so that these loans, in a gradual manner, in a well-managed manner, where the board approves a policy, there has to be cash flow available in the project and things like that. And once you permit a restructuring of the loan, then these loans can be treated as standard loans. If they get treated as standard loans, it becomes easier for a bank to provide funding for these loans. So this is one thing which needs to be done. The second thing which could perhaps be done is that in the short term, till this difficulty lasts, till we get out of this extremely difficult phase, we should look at reclassifying non-performing loans from a 90-day category of classifying non-performing loans from 90 days to 180 days. So a loan should be classified as a non-performing loan only if the installment is outstanding for 6 months and not 3 months, as is the case today. So I think a combination of these 2 measures will give a little more confidence to the banking system to start lending money again. And on its part, RBI, as they have done all along, should continue to ensure that there is enough liquidity which is being provided into the system.
But are there larger concerns about the inability, of borrowers to repay their loans? The economic activity has come to a standstill now for 5 weeks. And obviously one part of it is businesses, but also car loans and home loans, people who've borrowed money for that. Is there a concern about repayment?
It is, even though RBI has permitted a 3-month moratorium for payment of for paying the installments, if you look at the data of people who have actually availed of the facility, it is not as high as one would otherwise have expected. So my sense is that if you look at the banking system as a whole, obviously each bank will have its own number, its own reasons why its number is higher or lower. My sense is for the banking system as a whole, the number should be 25% or under 25%. So which means that 3/4 of the borrowers have believed that they have the financial resources and therefore have not availed of the concession or the moratorium that the RBI permitted. So it means that people have money in their hands. There will be some degree of pain that some certain industries will face, like, for example, I mentioned hotels and real estate and hospitality and hotels and stuff like that. So I think these industries, if RBI is to permit a one-time restructuring of loans, then automatically over the next 6 to 9 months, as normalcy returns back into the system, these companies will again become strong.
Actually, just to take that point forward, the government, the Indian government has decided to not come out with a big bang, stimulus package or even a set of big bang announcements right away. They're doing it in a smaller graded fashion. Some announcements have been made. Reserve Bank of India largely has taken the biggest steps. But as we look towards, the third phase of this battle, post-May 3rd, and restarting our economic activity, what should be the focus sectors and priority sectors even for the government?
Well, my personal view is that the government should do 3 things. The first is the government should probably look at raising money through tax-free bonds. Tax-free bonds will give the government the ability to generate money from the market at relatively lower cost and use that money for investment in infrastructure, building infrastructure projects, building roads, building bridges, building rail lines, and so on and so forth, because that will in itself create jobs. The biggest job creator in the economy is really real estate, manufacturing, and infrastructure. And of course, SMEs. So these are the sectors in the economy which need to be given some sort of incentive. So first is raise tax-free bonds. Government spends money directly on infrastructure projects which create jobs. 2 is encourage the private sector to create jobs. And in the long term, it is not possible to keep providing food and providing money, at no cost to people. So we have to create a mechanism through which jobs are generated, jobs are created, because through these jobs, people will start getting employment again, they will start earning income, and as they start earning income, they will automatically become self-sufficient. So sectors in the economy like manufacturing and real estate are really the 2 sectors which create huge number of jobs. Infrastructure. These are the sectors which create jobs. And each of these sectors have their own difficulties, have their own challenges, have their own, they require their own different things as incentives. So it's not necessary for the government to step up a huge amount from its fiscal resources, but just do a few measures which are required to give some support, give some encouragement to these industries, so they then in their turn create jobs, and those jobs ultimately lead to self-sufficiency amongst the people. And the third thing, to my mind, what needs to be done is the government has reduced the tax rate on the corporate front, but on the individual front, the tax rate is still very high. And that is resulting in people, consumption slowing down in the economy. At the end of the day, manufacturers will produce more. if they see demand for their goods and services. And you will see demand for goods and services if you leave more money in the hands of people. So therefore, my recommendation would be that we reduce tax rates across the board, including for the high net worth individuals, because today the marginal tax rate of 43% which we have is really pulling back a lot of people from consumption. So we should do three things: raise money to tax-free bonds, government spends money, creates jobs; two, give incentive to private sector to create jobs, incentive to industries like manufacturing, real estate, construction, infrastructure, which will create jobs; and three, reduce individual tax rates, so more money is left in the hands of people, which can then get consumed. As consumption in the economy increases, manufacturers will want to produce more because they see demand for their goods and services. And as they produce more, they create more jobs. As they create more jobs, more people get employment, more people become self-sufficient.
Okay, so a very clear-cut, set of recommendations there coming from Mr. Keki Mistry. Thank you so much for speaking with us and speaking to the viewers of Mirror Now, Mr. Keki Mistry. Well, with that...